Crude prices edged higher, briefly topping the $60 mark amid expanding Russian sanctions and increasing US exports to India. However, the overall outlook remains fragile amid persistent OPEC supply risks and demand uncertainty. Now, looking at the US oil chart from a weekly timeframe perspective, following the rebound from the 2025 low at $55, it has reclaimed levels above the $60 mark, holding near the midzone of the descending channel established since June 2025. Now, the next upside target lies near the upper boundary of that channel at $65, and a confirmed close above this level could extend gains towards the $70 barrier, potentially forming a double top pattern from the $55 low and testing a long term bullish breakout or a pullback within the borders of a descending price channel that has persisted on the charts since September 2022. On the downside, if prices remain below the $60 mark, the trend may retreat toward 2025 lows near $58.40 and $55, and the confirmed close below those levels could open the door to new yearly lows near $52 and $49 respectively. Now, similar to the US oil chart, Brent crude is holding above the midzone of a well-respected downtrending channel that has been in place since December 2023, trading above the $60 mark. Now, the weekly RSI has moved from its overbought peak in 2023 to an oversold trough in 2025, potentially forming a complete downtrending cycle. The recent bounce between April, June, and October 2025 sets the stage for a potential short-term bullish continuation if prices close above $66, $68.70, and $70 respectively. The $70 level remains the key barrier between a long-term bullish breakout and the continuation of the descending trend since 2022. On the downside, a close below $60 could send prices back towards the 2025 lows near $58, with further downside risk extending towards $51.30. This week's mega cap earnings and FOMC meeting could shape the overall market sentiment alongside the US-China trade negotiations and their respective implications on crude oil.